Hello everyone. Uh, from today's class, you can know that how to prepare income and expenditure account from receipt sign payments account. So, as a recap, income and expenditure is similar to profit and loss account. Already, we know that income and expenditure is uh, prepared in non-trading organization, whereas profit and loss account is prepared in trading organization. Whereas income and expenditure account follows nominal account rule, whereas profit and loss account follows the nominal account rule. Both are the same, but words are different. It includes, it means income and expenditure includes all revenue expenses. It includes all revenue expenses, all revenue items will be recorded, and all revenue incomes for the current year. Profit, the word used in profit and loss account, whereas excess of income over expenditure is called as surplus. It is equal to profit, but we does not use the word profit in non-trading organization. Whereas loss is named as excess of expenditure over income. Loss is the word used in profit and loss account. Instead of this, we are using excess of expenditure over income, means deficit. Excess of income over expenditure means profit. We use surplus like that. Preparation of income and expenditure account from receipts and payments account. So see here, from the following, prepare income and expenditure account for the year ended 31st March 1972. To balance, cash 55, bank 455, 1972 March. To subscription 3000, including 200 for 72-73 year. To interest on investments 1500. To bank interest 10 rupees. To sale of scooter 250. By salaries 3600. By rent 600. By printing 145. By postage 25. By bicycle purchased 95. By plan bonds 680. By balance cash 212. By bank 113. Okay, some adjustments are there. Additional few subscriptions include 120 for 1970-71. Rent includes rupees 50 paid for March 1971. Subscription amounting to rupees 150 have still to be collected for the year 1971-72. Rent for March 1972 has still to be paid and rupees 25. The outstanding against stationery bill, the book value of scooter was rupees 320. Oh, see here, solution is there. Salaries 3600 posted at expenditure side. Rent 600 could be deducted. Previous year rent 50 and added current year outstanding 550. 600, to printing 145, outstanding 25, total 170, to postage 25, to loss on sale of scooter book value 320, realized 250, remaining is 70. Coming to credit side, that is income side, all revenue income should be posted here. By subscriptions collected 3000 relating to previous year should be deducted 120, 2880 relating to current year, future year should be deducted 200, total 2680, and outstanding expense of current should be added 150, total 2830. We record. Interest on investments 1500, it is the income. Bank interest also revenue, so posted here 10 rupees. So excess of expenditure over income means loss, means deficit. So see here, assignment. The following particulars relate to the Rangian Club for the year ended 31st December 1972. Prepare income and expenditure account. So, receipt signed payments account for the year ended 31/12/1972. The balance brought down subscriptions arrears 24, current 1266, advance 48, to profit from canteen 900, to miscellaneous 45, to sale of old newspaper 112, to dividends 485, by salaries 1245, by stationery 240, by rent and taxes 360, by telephone 60, by investments 750, by advertisements 105, by postage 100, by sundries 350, balance carried down 270. Okay. So additional information or adjustments, there are 450 members, each paying annual subscription rupees 3, 27 being in arrears of 1971 at the beginning of the year. Stock of stationery on 31st December 1971 was 30, on 31st December 72 54. Cost of buildings is rupees 6000, depreciate at the rate of 5%. Excess of income or expenditure is 156. So with the information we can prepare the income and expenditure account. The second one, so see here the second one, from the following information relating relating to Indian Cricket Club, prepare an income and expenditure account for the year ending 31st March 1969. The abstract of the cash book for the year is as follows. The members to member subscription 2500, to members admission fees 150, to sale of old balls etc. 25, to hire of ground 150, subscription for tournament 500, cash drawn from bank 2000, to donation 6000, 5000, by upkeep of field and pavilion 1000, tournament expenses 350, rates and insurance 100, telephone 25, by printing and stationery 50, by general charges 25, by secretary's honorarium 85, by grass seeds 15, by bats, balls etc. 350, by lodgement in bank 8,300. See here, member subscription is a revenue. It should be posted on income and expenditure. Members admission fee. It's a capital posted on liability side. Sale of old balls. Balance sheet. Hire of ground. Income and expenditure. Subscription for tournament. Liability. Cash drawn from bank. Donation. Income and expenditure. Upkeep of field of pavilion. Tournament expenses. Revenue. Rate side interest revenue item, payment side, telephone payment side, printing and stationery payment side, general charges payment side, secretary's honorarium, grass seeds 15, bats, balls, purchase means asset, capital expenditure, balance sheet, lodgement in bank, balance. So additional information is here. Assets at 1st April 1968, cash at bank 1500. Stock of balls 750, printing and stationery will be posted in payment side 100, subscription due 250, liabilities nil, donation and surplus on account on tournament should be kept in reserve for permanent pavilion, subscription due 31st March, write off 50% of bats, balls, 25% of printing and stationery accounts. So you have to deduct the following items by percentages. Okay. Next, third one, the following is the receipts and payments account drawn from the cash book of Madurai Cricket Club for the year ended 30th June 1967. So 1966 July, first one, 12,000 cash in hand, opening balance, bank balance 12,000, passbook balance, savings account 16,000, current account 4,000. 1967 June 30, bank interest entrance fee 2,500. So this balance are not recorded in income and expenditure account. Only entrance fee should be recorded in income and expenditure account. Why? Because it is a revenue income. So donations and subscriptions are recorded in revenue, income and expenditure 25,000. Contributes to annual day, revenue expenditure, sales of equipment, capital 1000, net proceeds, income 12,500, receipts and revenue item, income and expenditure account. 1967 June 30, remuneration to cricket coach. The payments should be posted in income and expenditure account. Groundman's pay posted in income and expenditure account. Purchasing of equipment and moving machine, capital expenditure 18,000. Ground rent 3,000 payment. Annual day expenses 7,000 posted in expenditure. Printing and stationery 3,200. Repairs to equipment and machinery Capital item posted in balance sheet, on-roll into secretary. It's a revenue item posted in income and expenditure account. Bank balances, closing balances should not be recorded in income and expenditure account. So additional information is here. It's a 1966 July, 1967 June. Subscription due from members 3000 and 2000. Sum due for printing and stationery 1750, 900. Interest on savings account, savings bank account not entered in passbook. Machinery and equipment 10,000, 27,000. Year are required to prepare income and expenditure account for the year ended 30th June 19. So with this follow with the details we can prepare the income and expenditure account. Okay. Next summary. We have discussed today the preparation of income and expenditure account from receipts and payments account and list of balance sheet. So here are the some quizzes are there. We have to answer it. Subscriptions for the current year 10,450, including 450 next year deducted, but subscription not yet received means 10,000 credited income and expenditure account means first of all 10,450 subscription amount. So future year will be deducted means 4,450 will be deducted. Next 1,450 minus 450, the net value is 10,000 and current year subscription is to be added, that is 500. So 10,500 is to be credited in income and expenditure account. So B is the correct answer, 10,500. Next one, salaries paid for rupees 99, 1999 rupees 9,600 includes 700 for 1998 and at the end of 1999 rupees 900 is unpaid. The amount debited is income and with salaries. So 9,600 includes 700 minus and 900 is to be added. So 8998 B is the right answer. So this way we may prepare the income and expenditure. Okay. So once again see here preparation how already we know that in every non-trading organization they prepares three types of accounts. One is receipts and payments account, income and expenditure account, balance sheet. Whereas income and expenditure receipts and payments account, income and expenditure account, balance sheet. Receipts and payments account follows the cash account rule, same as cash book which is prepared in a trading organization. It follows the nominal account or real account rule, that is debit what comes in and credit what goes out, and whatever the receipts done to or organization should be debited, whatever the payment should be done to organization done by the organization should be credited in receipts and payments. So irrespective of the revenue and capital item that should be recorded in receipts and payments account. Coming to income and expenditure account, whatever the items relating to revenue items that should be recorded in income and expenditure account. Okay, revenue items should be recorded in income and expenditure account. It is same as profit and loss account. It follows the nominal account rule, that is debit all loss and expenses and credit all incomes and gains. We use the word instead of profit in this surplus. Surplus means excess of income over expenditure, means income is greater than expenditure. Next, instead of loss we are using word deficit, means expenditure is high than the income. So the word loss. Okay, instead of using profit and loss, here we are using the words surplus and deficit. income and expenditure does not starts with the opening and closing balances. It should takes only current year or current financial year revenue items. Okay, like that you may prepare the income and expenditure account. Okay, thank you.